Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers were more active in the early part of the session and pushed ES up to the 76 to 78 resistance zone, at which point responsive sellers entered the market, and now heading into the open, ES is very balanced and trading within a range. Now, right off the open, we have initial support at 64.5 to 66.75. This area is the initial support zone, but it's also going to be used as the short-term bull bear zone. So holding above that zone tells us that the buyers are still fairly active in the market, and a break below that zone could shift short-term control back to the sell side and bring the 54.75 to 56.75 zone into play, and possibly even lower. At that point, we'll just have to see what type of weakness we're seeing on the day time frame and what type of momentum we're seeing on the way down. But in the event that we break and hold below 64.5 to 66.75, the next major support on the smaller time frames is 54.75 to 56.75. That's still an area where buyers can be active, but if we're going down on very strong downside momentum and very weak internals, then the market does not have to stop and shut off the downside at the 54.75 to 56.75. We can actually head even lower. Right now you can see that the market is essentially trading within this range, and the bottom edge of that range is 45 quarter to 46.75, and the upper edge is 77 to 79. So in the event that we hold initial support and we start seeing some strength on the internals and upside momentum, and we go up to 77 to 79, that is a major inflection point on the shorter time frames, and a breakout above 77 to 79 would mark a break above a 6-day balance, and that would bring the 87 to 89.5 into play. That's still an area where sellers can be active, and potentially 92 to 94, which is still another resistance zone where responsive sellers can be active on first test. But on the upside, in the event that we do actually get a breakout above 77 to 79, just understand that that would mark a break above the 5 to 6 day balance area, and as long as it's happening on high momentum, it can follow through and head up to 87 to 89.5 and possibly even 92 to 94. And in the event of very strong buying, we have the 95.75 gap and strong resistance at 98 quarter 2175, which has high probability of shutting off any buying. But again, that's something we'll have to actually see in real time. And in order to get a strong balance breakout, we will have to see strong upside momentum and a strong advanced decline line with the other markets also participating in the upside break. And if we're not seeing that picture at 77 to 79, then sellers can still defend that zone and the market can remain within the recent balance area. So the idea today is to watch 64.5 to 66.75, use that to establish short-term bias, and understanding that this is a important inflection point here, and we can go directional off of that. If we break below it, then we can go directional down into at least 54.75 to 56.75, and if we hold it, then we can just as easily return and test 77 to 79, and that's going to be the inflection point where we'll have to see whether there is enough momentum and underlying broad market strength to support a strong breakout above that zone. And if there is, then it's best to step aside. The area has been tested a few times, and if we're seeing a lot of upside momentum, then we're not going to want to short that zone. But if we're seeing a lack of momentum, then we can take a short at 77 to 79, because at that point, up at the balance area high, the onus is on the buyers, right? They're the ones who really have to press and push it above 79, and simply a lack of upside buying pressure would be enough to trigger some profit taking and get a pullback off of 77 to 79. So right now our short-term bias is relatively neutral because we are trading within this sideways range, from 45 up to 79. And anytime you're trading within a range or just balancing within a sideways range, either side can be active, right? Sellers at the top and buyers active at the bottom of the range. So right now we do need to be nimble and flexible with our bias, but the 64.50 to 66.75 is a good zone to rely on to establish your short-term bias right off the open. and be open-minded to the possibility of a breakout above 77 to 79 for a move up to 87 to 89.5, possibly 92 to 94. On the downside, if we get a strong failure, then we can even retest 49.51, and 45 quarter to 46.75 is the bigger picture inflection point for buyers on the downside. So those are the main ideas heading into the open. Let's see if the buy side can maintain control above initial support, use that to set our bias, and we'll take it from there.